This is our Forex blog for September 1st, 2011. We just released a new version today, which has a new FX Trend Pro in it. This is a tool that combines 5 different statistical trend tools. 3 of them measure in totally different ways the direction that each currency is moving versus all the rest of them. And one measures a bar by bar intensity, how far is it moving this bar compared to the last 20 days average. And the last intensity tool measures, the last 30 minutes to 45 minutes trend. And so by averaging all those together, you only have one indicator, and it gives a much more accurate. If you see extreme levels at or above the 80 level, like in the dollar last night, from 1800 up until about 10 o'clock, then you have some weakness here, and then some strength came back in at 3. Anytime you have strength, it's always best if the longer term time frames underneath it also have some strength. You can see that the daily trend shifted up, but the weekly and monthly was down. So if you do find a trend like that, it's not as likely to trend the entire day because the longer term trend is slightly down. You're better off finding a currency like the Australian, which has some strength here at 2 and weakness on every other time frame, and you can clearly see the euro is quite weak the entire day. The peaks are vastly weaker than any of the small green bars. And that's the whole purpose behind having multiple different statistical trend tools. Let me bring up a separate chart here. So the euro was weak last night. The dollar was strong from 3 to 6. So you could sell the euro dollar from 3 to 6. If you look at the chart, let me make it a little bigger. Here's 3 o'clock right here. Notice you would have got into that trade pretty early into the move right here at 305. Short the low, just broke out. Our tools are extremely fast, and you can see it fell, well over 100 pips. Even if you got out of it right here, you made about 50 pips. You might have shorted it again in here and made a little bit more. But the point is, if you're looking to sell this, you made money. If you look to buy and you do the opposite of what our tools told you, you more than likely lost money. Again, the Australian was also strong last night. So the Euro Australian also would have been an excellent one to sell. Most people don't typically trade this pair. At 2 o'clock, the Australian became really strong. And then again at 3, when the Euro went super weak, you can see it fell another 50 pips here. Kind of went sideways as this was a key support area. And then when it broke down again, you have your Fibonacci profit target level to go as your exit. And you can always put alerts on the chart. If you see a little sideways range like this, if you want to be notified, just put create alert, and you can get a cell phone message, audio alert, email alert, so you won't miss it, and you don't have to sit there and watch it for hours waiting for the breakout. You could also put your a stop limit order out in the market and wait for price to get you in that way. Another one that was consistently and clearly weak across all time frames was the pound. It had one 5-minute bar of intense strength, but for the most part it was weak from about 6:30 onward. Unfortunately, the dollar and the yen were also weak, but you could have traded it against a strong Swiss. The Swiss was strong, well before when the pound for the most part was weak from 4 to 5, and then from 6:30 onward. Let's look at selling the pound Swiss. And again, notice some strength in the Swiss started here around 3:30. That's right around here. Could have got into it pretty early. And then from 4 to 5, remember the pound was weak. You have this nice little 80 pip drop here. And then from then on out, you sell every counter trend move up. You might have made a little bit or broke even on that. Made 20 pips, made 10 pips, made 20 pips. This one probably 60 pips. Another pullback trade made 30 pips. Another pullback trade made 50 pips. This is a pretty big drop from 2,900. It's down 57 pips right now. So using the currency meter, especially with the new enhancements we've made, one of the old tools we enhanced dramatically. It probably improved this currency meter at least 50%, and then we put in an intermediate time frame trend intensity tool too, which I believe improved this another 5 or 10%. So it's vastly superior to what we had before. You can clearly see the Swiss is one of the strongest ones. The Euro Swiss also, by the way, would have been an amazing one to sell. And the Euro was even more weak than the pound. So as you can see, the Swiss When it was weak and the euro was weak, it kind of just drifted sideways. But once it went really strong around 3:30, the stronger Swiss drug the super weak euro down, and you can see, about a 200 pip drop. Even, if you got short here, you have, 20, 30 pips, 20, 30 pips, 20 pips, 100 pips. There's a lot of different trades, and you can always drop down to a range chart. 6R shows 6 pips per bar, and on a 5-minute chart that does not appear to be as many entries, but on a range bar chart there are tons of entries. When you have a very clear direction like you do the Euro Swiss, you sell counter trend moves, and you can see this little tiny move right here is 40 pips. It was so volatile. Let's say you got short right here and you lost money. You got short again here and you made 20 or 30 pips. You have this nice little counter trend trade right here as well, which you probably wouldn't have even spotted on a 5-minute chart. And you either made a little bit, got out at break even, or if you held on and you let your stop above the high here get hit, it never would have got hit, and it went down and you could have exited at the fib targets. Range bar charts make it very clear, when to go short, and you can have the tiniest losses, and you can base each currency's number of pips per bar based on the past volatility for that pair. You can add an indicator we've created that lets you pick any times of the day that you want to trade. 3 to 12 is the most volatile, and you can show the average and the median. How many pips does it move on, let's say, a 5-minute bar? This one's around 11. So you'd use 11 pips per bar to simulate a 5-minute bar. So 11R, put that on there, and you can really, clearly see patterns, and also nice little wedge patterns right here and here. Pullback trade right here, pullback trade right here, pullback trade right here. You would have had a loss here, pullback trade here, pullback trade here. Pretty much all the trades worked except one, because you're using the currency meter to be in the currency that is most, and I say that again, most likely to continue trending. If this wasn't going down, if the euro wasn't that weak, it would not have readings over minus 80. If you would have saw it at minus 60 or minus 70 red, it wouldn't have been nearly as good, and it's far less likely to work. But this was trading one of the weakest ones versus one of the strongest ones, and almost all the time frames all lined up. So the odds were with you.